Crypto kids, we need to talk. And it's not just about whether if Bitcoin will break below $11,900 and hit 100K in the next few days. And it's not just about what I think is going to happen to the altcoin market. Are we going to see the full-blown altcoin season that everybody's expecting? And it's not just us doing a comparison of all the four different points of very important liquidity sources the United States has and how that has created a massive altcoin season in 2020. And if I think it will see, we will see the same sort of scenario in this bull market cycle, we're not going to only go into those things, guys and girls. We're also going to go into what I think about the total state of the United States economy. Hint, it's not so good, and how that impacts Bitcoin, how that impacts altcoins. And in summary, it's really going to be a phenomenal video. It's not a video you want to listen with only one ear, with only one ear only. You want to be listening with both ears and watching until the very end. And yeah, let's get straight into it without wasting too much more of your time. If you do enjoy these videos, guys, please make sure to destroy the like button. That would be so appreciated. Those likes mean so much to me because it tells me that you guys are actually liking the content. So if you do have a Google account and you have the ability to actually sign in and like the videos and subscribe to the channel, that would truly be amazing. If you've done that, I trust that you've done it. We can go into the economic data, and that's going to give us a picture of what will happen to Bitcoin and also what I think will happen to the altcoin markets. Firstly, in 24 hours' time, Fed Chair Powell is going to be speaking in the Jackson Hole, Wyoming conference, and he will be telling us his outlook on monetary policy. A quick hint, I don't think it's going to be great because in just about 2 hours' time, the probabilities of a September rate cut fell from 81% already down to about the low 70%. So yeah, the 71.5% area. This is just happening in 1 to 2 hours' time maximum. So the analysts of the monetary analysts, they're currently expecting that those numbers will drop even more vigorously going into Fed Chair Powell's speech. We will be streaming it tomorrow live on the Moon Show, 6 p.m. GMT plus 4 time. I highly recommend that you tune into that show because Bitcoin is going to be likely very volatile, and the point of which, if we break below 3.11.9 or if we hold above it, I think that will be decided during that speech. So it's a conference, it's a speech that you don't want to miss. So please stay tuned on the Crypto Kid channel and the Moon Show channel to get full coverage of what happens to Bitcoin following Fed Chair Powell's speech. And in summary with that, it's very likely that actually it's likely that we don't get a rate cut in September, and we have to postpone it to a later time in Q4 of 2025. Most Fed bank governors, they expect a rate cut, a 25 basis point rate cuts by the end of this year. So I don't think rate cuts in general are going to be postponed to 2026. I think we're going to get a September or a Q4 rate cut, whether that's in September, October, or December, but a one full percentage rate cuts, I think that will take place in most likely March, I would say, maybe even April, and that will likely trigger altcoin season. I will tell you why. And then going into Q3, Q2, Q4 of 2026, I think the bear market is going to begin. So now, I kind of went into this earlier than I wanted to, but I think still now buying altcoins on this dip and potential further dip is going to be a really nice opportunity. Okay, let's continue on with the data. We got the US initial jobless claims. The actual jobless claims are 235,000. The forecast was 225 and the previous was 224. So labor market's not looking the best. On top of this, we have another Fed governor or a Fed governor saying that it's just now that we're starting to see the tariff impact on inflation. Remember, Fed Chair Powell was emphasizing that these tariffs are actually going to have the major amount of inflationary impacts going into the summer months. And he was right. If you go to July, the core CPI, the leading metric for the Fed's interest rate decision, that jumped to 3.1% from 2.9%. In May, it was 2.8%. And that's significantly higher than, well, it's 50% higher, more than 50% higher than what the Fed wants to see for inflation. And that's a 2% target. And Hammack, the Federal Reserve Governor, one of the Federal Reserve Governors, she's the governor of Cleveland, she mentions that they don't expect to see a full tariff effect, meaning that inflation can potentially continue on increasing basically until next year. So that's another reason why Fed Chair Powell may be very hawkish tomorrow and say, hey, we're not really looking to cut rates at all. Maybe that could be something that he says. You never know. We're going to find out tomorrow. So that's another point that's looking very concerning. And it's concerning from a point of monetary relief, because if you don't cut rates, then you're not giving the incentive for people to go ahead and borrow money from the bank, firstly, at lower interest rates, and then invest that into what's classified as safe investments like treasury bonds that give you a guaranteed fixated yield, or put it into the S&P that gives you on average 8% of returns, or Bitcoin or crypto for the matter. You're incentivized to keep your money in the bank and receive your guaranteed 4%, 4.5%, whatever it is rates without doing anything. So there's no incentive to put money into the economy. And that's bad. That's bad for altcoins. I still think that altcoin season will happen. I'll get into why. So that's bad for altcoins. That's bad for altcoins. On top of this, you have the United States Treasury buying $4 billion of its own debts, one of the largest Treasury buybacks in history. They're doing this because the year of 2025 is the highest amount of dollar debt financing, refinancing that the US has had to do and will probably ever have to do, at least in over the next few years' time. It's $7.5 or $7.6 trillion worth of refinancing the US government has to do this year. How does the US government raise money to pay its interest on its debts? Well, they issue more bonds. But that vehicle of creating debts and therefore printing money to pay back their own debts, which is an everlasting cycle of them printing more money to pay off their increasing national debts, the way they do this is via bonds. But bonds are not seeing any buyers. Nobody wants to buy US Treasuries. That's why the central bank, the Federal Reserve, is forced to buy their own debt because nobody else wants to buy it. Apart from the central bank, the only other buyers for US Treasuries at huge amounts appears to be stablecoins. So the reason why the government is backing stablecoins so much, and private stablecoins, not a CBDC, which would be the smart thing to do, rather than giving control of it to the private sector, they're backing this simply because the stablecoins are the biggest buyers of US Treasuries, and they have to support them, because if they don't buy it, then really go into a problematic situation where the government will not be able to raise enough money to pay off the interest on their debts, and at that point, the whole system just sort of freezes. But the bad news is, even with these stablecoin companies, it's going to be very tough for them to refinance that $7.6 trillion in debts. And on the 26th of August, there's going to be a $69 billion two-year note sale. Let's see if there's going to be good enough demand for it. If it turns out that the demand isn't there, that will cause huge panic in the market. So just FYI, the 26th of August is an important date for that reason. Then you go into the Federal Reserve reverse repo. That's down to its lowest level in 4 years. The amount in 2023 was over $2 trillion, and now it sits just at 20 to 30 billion US dollars. What is the reverse repo? It's basically the Federal Reserve identifying any excess cash in the banking system, taking that in to control monetary policy. So if there's too much excess cash, where you go into very low amounts of interest, and the banks are giving away money for basically free, if the Federal Reserve wants to control inflation, they can take that money to control inflation, to stop banks from giving large amounts of money away, because if everybody has a lot of money and they're buying stuff, then prices increase. The more demand you have, and if demand increases and supply is stable, then prices will go up, inflation will increase. So to stop that, the Federal Reserve can choose to grab excess liquidity and control monetary policy. See, they would do that to pay off that interest. So they don't only do that to control monetary policy, they can also do that to pay off a little bit of their debts. But it's impossible for them to do this with reverse repos, because there is no money, there is no excess cash in the banking system for them to take and pay the interest off. So the only thing that they can resort to, the job market, by the way, job postings at the lowest level since COVID, the only thing that they can do is print more money. And them printing more money is going to cause altcoin season, and is going to cause, in my opinion, for Bitcoin to go up. And I will get into that messy charts, which is a very important charts, in only a few seconds time. The only final point that I want to mention about the US economy is Secretary Scott Bessent finding the replacement for Fed Chair Powell he's going to be replaced by Q1 of 2026, and the new person they find could not be politicized. If they are politicized, it will devalue the value of the dollar, because people will lose confidence in the value of the dollar. And if the value of the dollar goes down, then technically Bitcoin and crypto markets should go up. So that leads me to this chart. This chart is important. I had to give you all of that background context for me to explain to you what this chart does. On this chart, you're going to see 4 different points. And these 4 different things are the tools that the US uses to essentially control markets. Number 1 is the M2 money supply. That's the total amount of US dollars available. Then you have the federal funds rates, which is the interest rates. Then you have the Dixie, that's the value of the US dollar. And then you have quantitative easing versus quantitative tightening, the amount of assets the central bank has on their balance sheets. So the first point, M2 money supply, I think that's going to continue going up because there is no choice for the government to not print money, otherwise they default on their debts. I know in the short term, the chart shows that, M2 money supply goes down. I think we can see a potential short-term top in September. That's what I'm starting to believe. In September, I think Bitcoin will see a short-term drop. And I think the M2 money supply could reverse its course as the government needs to pay off their debts fully when we come towards the end of the year. That's still not so clear, but my probabilities of M2 money supply continuing to go up have increased because of the recent economic data that I've seen. Will the Fed cut rates down to 0% like they've done during COVID or pre-COVID, and they've kept it at 0% for a long amount of time to provide the most amount of economic stimuli possible to the market so that we avoid a Great Depression-like recession? I don't think so. We don't have any troubling events at this moment of time, like COVID, to cause the Fed to, I think M2 money supply will go up, but I don't think it will double. They doubled the circulating supply of M2 money supply in COVID or pre-COVID or around COVID to create that economic stimuli alongside keeping the interest rate at 0 for people to borrow and then buy whatever they want to buy. Because we had that amount of huge economic stimuli, you saw the total crypto market cap go from $350 billion all the way to $3 trillion, almost 10xing. And that's impossible to do unless you devalue the dollar by 50% and keep rates at a 0% level for an elongated amount of time. Do I think it's going to happen this time around? I think it's unlikely. I think that interest rates will come down. I don't think it will go to 0. I think M2 money supply will go up, but I don't think they're going to print half the money in existence because there's no need to do so. I think the value of the dollar, which if the value of the dollar goes down, then the price of Bitcoin goes up automatically because you trade Bitcoin against the USD. If USD falls in value, then Bitcoin goes up in value. I think the dollar will come down. That can maybe even come down to where it was during COVID due to the potential politicization of the Fed and due to Trump's sort of efforts on doing basically that. And if the dollar falls in value, then the price of Bitcoin should fall in value. And do I think that we will get the same amount of Fed buying assets to provide another source of economic stimuli? Like what we did in COVID, I don't think so. But you can see that this curve is plateauing, and I think there will be a reversal to the upside. So in summary, even though I don't think we will get the same amount of economic push or stimuli that we saw in 2020, I think something similar is going to happen at a lower magnitude. And that amount of economic stimuli will be enough to trigger altcoin season. And therefore, I still think that buying your favorite altcoins today makes a lot of sense. And I'm personally very bullish on Ethereum. And I think Ethereum will go to $8,000. I opened a small position over on Weeks just to kind of prematurely trade the breakout. Let's see if it can load. I'm going to keep this as a DCA position. I think tomorrow is going to be critical. Bitcoin can break below 11.9. If it does with a daily candle closure, then my target would be 100K. That would mean, yes, Bitcoin decouples from the M2 money supply, but I don't want to get into that on today's video because we already covered so much. If you want to find out what the decoupling of M2 money supply and the price of Bitcoin would do for the future outlook of Bitcoin, stay tuned for tomorrow's video, and that would mean that you have to subscribe. But there is one thing that I want you to watch out for Bitcoin, and that is 11.9. If that breaks with the daily confirmation, then 100K is going to be the target. I'm not shorting Bitcoin, I'm not closing any long positions. Even if that will be the case, I will deal with it and buy more Bitcoin down there. But what I would encourage you to do is consider potentially de-risking some of your altcoin positions. If you have a lot of altcoins or if you have a lot of over-levered trades, maybe the next 24 hours you want to de-risk in huge economic events like this one. I personally don't keep massive levered trades. I tend to close them or de-risk until we find out about what really happens here. So that would be the only tip that I would give you. But with that said, guys, thank you so much for watching. Stay tuned on this channel for more updates, and I'll see you very soon. Take care, and as always, bye bye.